Welcome back, everyone. Greg Diamond here with another edition of Diamond's Edge video. And I'm going to keep things pretty simple this week. And it's really based around the Federal Reserve. I believe that they're making a mistake cutting rates the way they did last week. 50 basis points, 25, whatever it might be. And this isn't something that I'm guessing about or speculating about. And I'll just jump right into it here. All right, this is TLT, which tracks bonds, okay? And when the Federal Reserve cut rates, bonds dropped. So basically what that means to me, at least in the short to medium term, is that the bond market is not buying what the Federal Reserve is selling, okay? Cutting 50 basis points is a pretty big deal. And the bond market is saying, yeah, we don't believe you that you've quote unquote won inflation. So now this, as I mentioned to 10 stock trader subscribers this morning, that doesn't mean that, we're going to see this huge crash in stocks or, that inflation is going to, drop below 2%. I think it's going to ebb and flow. We're going to see, sort of sticky inflation. We'll see some good numbers. We'll see some bad numbers. But overall, the bond market is signaling, look, guys, I think you're making a mistake here, and inflation is actually going to be somewhat sticky going forward. So, again, if you were to just not know that the Federal Reserve had raised or cut interest rates here, all right, and you would have just kind of lived in a box and said, what's happening here with the bond market? What would that tell you regarding inflation or regarding interest rates? Well, with bonds dropping, interest rates rise, you would say, well, maybe there was higher inflation numbers or the Fed didn't do anything. But that's not what happened. The Federal Reserve actually cut rates, and yet interest rates are rising and bonds are falling. And I'll show you, here's the U.S. 10-year interest rate, okay? And you can see, okay, down here, it's bottom and interest rates are rallying. Now, again, I'm not saying that we can't see interest rates come back down, but it's not this, one-way freight train where bonds are just taking off because they believe that inflation is going to come down. Bonds usually discount what's going to happen in the future. And right now it's telling us that inflation is not, quote unquote, one. And I think that if you think inflation is coming back down to the 2% target, I think you're in for a rude awakening. All right. Let's also look at what's happening with the dollar. Now, with interest rates being cut, you would think that the dollar would literally just start falling off of a cliff, but it's actually holding in rather steady here. And that's also going to be reflected in, gold and silver. So we're seeing silver come down today a little bit, and it hasn't had this big move. So, when you think about what the Federal Reserve has done in terms of a 50 basis points cut for the first time in a couple of years, that's a big shift in policy. But the major market in interest rates and bonds, not necessarily telling you that, the Fed has done the right thing. It can be taken as they're actually doing the wrong thing. And once again, just like, back in 2021 when they said inflation was transitory, right? And then they had to start hiking in 2022 to fight it. Now it's kind of the opposite. They're saying, we've quote unquote beat inflation, but the bond market is saying, I don't really think so. So again, I'm not saying that this is going to be a one-way freight train in terms of inflation just skyrocketing. It's probably going to be choppy, but I think in the long term, you'll probably see, as bonds are telling us, that we're going to be in for some volatile time periods regarding inflation, regarding growth, regarding the jobs market. And in turn, that means volatility within stocks and bonds. And as a trader, I'm looking forward to that because volatility is our friend. So just a quick message this week about kind of my thoughts around the Federal Reserve, interest rates, the dollar, even precious metals. And I'm going to have, some trade setups, over the next 6 to 12 months, definitely based around this price action that we're seeing now that the Federal Reserve has changed its policy stance. Thank you very much. I'll see you next week.